Mr. Patil, let's begin with the basics. Now that this 537 crore rupee expansion is out of the way, sales, how should they compound over the next 2 or 3 years or so? The reason why I ask you this is, if you look at the past 5 years, sales have compounded just at 6%. I'm sure a lot of shareholders are not really very happy with this kind of a progress. How does the future look to you over the next 2 years or so?
Yeah. So first, to talk about the past performance, even though the sales top line value seems less, but actually the volume growth will be higher, because the selling price of the APIs have come down quite steeply in last 2-3 years. So in spite of that, we were able to maintain our volume turnover, and it did reflect in the bottom line to some extent. Obviously, going forward, since last 9 months or so, the selling prices are quite stabilized. So now the true margins of the business are coming out. Having said that, I would like to point out that salicylic acid, where we have been bearing some troubleshooting losses, is also being expensed out in the P&L for last 6 quarters. So whatever numbers you are seeing in the P&L at this point are including those losses. So even when we break even in those projects, the margins should ideally improve further.
Now, when you look at sequential quarters from now on, both sales and margin expansion should happen. Would you want to put a number on where sales as a percentage could grow over the next 1 or 2 years, and how much would EBITDA margin expand? 2 reasons: you have gone through with CAPEX, and of course there are no expenses in the pipeline on capacity over the next 12 months or so.
Right. So I will go a bit, I will add one more year. I will say let us have a target for, let's say, 3 years from now. So what we see is that we do have a visibility of reaching a sales value of roughly around, anywhere between 3,200 to 3,500 crores. That should be our target top line for the next 3 years, 2 to 3 years, I would say. So it all depends how quickly the utilization ramps up. If it ramps up earlier, then we can reach that target a bit earlier, or else 3 years is the conservative target for us to reach that top line. And as far as EBITDA margins are concerned, what we estimate, if the market continues as it is, what it is right now, with the addition of these capacities and with new process, we are doing a lot of R&D in process improvements as well, and we have been getting success in that. Plus we are doing a lot of improvements in energy consumption. So all that put together should help us take our EBITDA margins to at least between 15 to 16%. And when the oncology block comes in full swing, that will be more long term, like 4 to 5 years, then probably that should pull up our EBITDA margins further up by a couple of.
If you like the video, do like, comment, share and subscribe.